So this video is going to be explaining how to fill out that third-party addendum. As you remember from how to write an offer video, we have written an offer for this particular property. So what we're going to do now is, because it's subject to financing, I need to add the third-party addendum. So I'm going to go add document to my contract folder and go to templates, go down here to broker my buyer purchasing, and it is the third-party addendum for financing addendum. So I'm going to hit add documents, and then I'm going to click on this. Again, it's going to ask me, do I want to autofill it with the property address? Yes, I do. It's going to save me a step. So there's the address right there. Because we were putting 10% down and the property, the offer price was $340,000, I know that doesn't qualify for FHA. It's above the lending limits on that. And in order to know that, you're really going to have to talk to a lender and find out how much can somebody be approved for a FHA loan, a VA loan, and a conventional loan. So for this purpose, it's going to be conventional financing. So I'm going to go ahead and check the box for that. I'm going to check box A, saying that it's got one mortgage, and the loan principal amount of, we said our offer price was $340,000. Mine, they were doing 10% down, which was $34,000, which means our loan amount is $306,000. And any financing due in the full of however many years. So if they have a fixed rate 30-year mortgage, that's going to go here. And you really need to talk to the lender prior to writing an offer to find out what these terms are. It may or may not have it on the pre-approval letter. Make sure you submit the pre-approval along with their offer. And then, so it's going to be due in full in 30 years with interest not to exceed. It really depends on what their lender said their interest rate was going to be. So, and again, it may not be a locked interest rate. So go ahead and put what they're quoted here. But when they actually get their financial approval, they may end up getting a higher interest rate than what's here. So if they do, then as long as it's within the amount of days that you specified for them to have financial credit approval, they can technically back out of this contract and get their earnest money back. Let's say they get 5% instead of 4.5%, which means that, well, now their monthly payment's going to be more expensive than they thought. As long as they terminate the contract within the amount of days that you're going to specify in this third-party addendum, they can get their earnings money back. But after those days pass, then this addendum is no longer in effect, and so they're locked into that contract at that point. So if they get a higher interest rate, well, then they're locked in, and they can't back out of the contract without losing their earnest money and being in default. So this blank right here, again, is going to be, if it's a fixed rate, it's going to be the same amount of years that's here. If it is an adjustable rate mortgage, it would actually be, it might actually be different here. Say 4.5% for the first 5 years, and then it would go up. And then the origination charges not to exceed, it's usually 1 to 2%. Again, ask the lender. I'm going to go ahead and put 1% here. So if they're doing conventional financing, so I don't need to check Texas Veteran or FHA or VA, USAD or USDA, reverse mortgage financing. Now, paragraph B, this is important because this says this contract is subject to the buyer being approved for buyer approval, so for financing. Yes, it is. So we're going to go ahead and check that. And then we're going to say buyer may give written notice to the seller within so many days after the effective date of this contract, and this contract will terminate and the earnest money will be refunded. So this is the amount of days that we're going to give our buyer to get full financial approval from the lender. I'm going to go ahead and I would say probably put 25 to 30 days in here, and it really just depends on how far out the closing date is. If you're looking at a 45-day close, I would try to do about 30 days and get it closer to that closing date. Now, again, this is going to be dependent upon your lender, how quickly they can get them financial approval. And remember, this is a negotiation piece as well. So the listing agent may actually want a smaller amount of days there. They may be willing to give you 30 days, maybe more. But if they're representing their seller, most likely they're going to want less days. Then right here, paragraph 2, this talks about property approval. It says property approval will be deemed to have been obtained when the property has satisfied lender's underwriting requirements for the loan, including but not limited to appraisal, insurability, and the lender required repairs. So this is talking about actual property approval. So there's two ways for the buyer to be approved, and one is based on their personal financial situation, and then the other one is based upon the property appraisal. So this is saying the property does have to appraise in order to be able to get lender approval for most loans. So if it doesn't appraise, then it's another way for them to be able to get out of the contract and get their earnest money back. Down here, if it was FHA, which this one is not, in this blank right here, what you would put is that it would be the contract price. It would have to appraise for the contract price. So that's what that blank is saying. And then you just make sure that they sign, and that is how you fill out the third party addendum. So I'm going to save that. And again, remember, whenever you submit the contract to the listing agent, you're going to make sure that you include the 1 to 4 family and the third party addendum, as well as the other documents. And there's going to be additional videos on that.